Welcome, listeners. Today we're diving into the fascinating world of asset reconstruction companies in India. We'll explore how these specialized institutions are tackling the country's non-performing asset issues.
That's right. Asset reconstruction companies have become a crucial part of India's financial landscape since their introduction under the SARFAESI Act of 2002. They're designed to acquire, manage, and recover non-performing assets purchased from banks and financial institutions.
Absolutely. It's worth noting that there are currently 28 asset reconstruction companies operating in India. Their role has become increasingly important given the scale of the NPA problem. For instance, in financial year 2024, public sector banks reported around 3.4 trillion Indian rupees in gross non-performing assets, a decrease from 7.3 trillion Indian rupees in 2019. Private sector banks reported a decrease from 2 trillion Indian rupees to nearly 1.3 trillion Indian rupees in financial year 2024 in gross NPA.
Those are staggering numbers. It really underscores the urgent need for effective NPA management. So how exactly do asset reconstruction companies step in to address this issue?
Well, asset reconstruction companies essentially purchase these bad debts and NPAs from banks and financial institutions. This allows banks and financial institutions to clean up their balance sheets and refocus on their core banking and financing operations. It's a win-win situation in theory.
Interesting. But I'm curious about the historical context that led to the creation of asset reconstruction companies. What challenges were they specifically designed to address?
That's a great question. The creation of asset reconstruction companies was actually a response to a long-standing problem in the Indian banking sector. If we look back, the issue of NPAs became particularly acute in the 1990s.
Right, I recall reading about that. Wasn't it related to the economic liberalization that India underwent at that time?
Exactly. The 1991 balance of payment crisis led to significant economic reforms. While these reforms opened up the economy, they also exposed weaknesses in the banking system, particularly in public sector banks.
And I assume this is where the various committees we often hear about come into play?
You're spot on. Several committees were formed to address these issues. The Narsingham Committee I in 1991 and Narsingham Committee II in 1998 were particularly significant. They recommended measures to strengthen the banking system and deal with the growing NPA problem.
That's fascinating. So, how do these committee recommendations translate into the creation of asset reconstruction companies?
Well, the Narsingham Committee II specifically recommended the creation of an asset reconstruction fund or asset reconstruction company to take over the bad debts of banks. This recommendation was a key factor in the eventual establishment of asset reconstruction companies.
I see. And I believe the SARFAESI Act of 2002 was crucial in this process, right?
Absolutely. The SARFAESI Act provided the legal framework for the establishment and operation of asset reconstruction companies. It gave these companies the power to acquire financial assets from banks and financial institutions.
But I'm wondering, how do asset reconstruction companies actually work with banks and financial institutions to address the NPA issue?
Well, it's a collaborative process. When a bank or financial institution identifies an NPA, it can choose to sell it to an asset reconstruction company. The asset reconstruction company then issues security receipts to the bank or financial institution in exchange for the NPA.
Interesting. And what happens how does asset reconstruction company acquires the NPA?
The asset reconstruction company then takes over the management of the asset. They use various strategies to recover the value, such as restructuring the debt, selling the underlying assets and collaterals, or even finding strategic investors for the business or settlement of dues of the borrower as the last resort to resolve the debt. It's a complex process that requires significant expertise.
That does sound complex. I imagine there must be some challenges in this process. What are some of the issues that asset reconstruction companies face in their operations?
One major challenge is the pricing of these assets. Banks are often reluctant to sell NPAs at a significant discount, while asset reconstruction companies need to price them low enough to make a profit. This can lead to a mismatch in expectations.
I can see how that would be a problem. Are there any regulatory measures in place to address these challenges?
Yes, the Reserve Bank of India, RBI, has introduced several measures. For instance, in 2014, the RBI increased the minimum investment requirement for asset reconstruction companies from 5% to 15% of the value of assets being acquired. This was done to ensure asset reconstruction companies have more skin in the game.
That's interesting. Speaking of regulations, could you elaborate on the legal framework that governs asset reconstruction companies? We mentioned the SARFAESI Act earlier, but are there other important laws or regulations?
Certainly. The SARFAESI Act and Companies Act are indeed the primary legislations, but asset reconstruction companies are also governed by guidelines issued by the RBI and other central and state legislations. These guidelines cover various aspects of operations, including capital requirements, transparency norms, asset classification, and corporate governance.
I see. And how have these regulations evolved over time? I imagine the government and RBI must have made adjustments based on the performance of how-do asset reconstruction companies.
You're right. The regulatory framework has been continuously evolving. For example, in 2016, the RBI allowed asset reconstruction companies to become sponsors of real estate investment trusts, REITs, and infrastructure investment trusts, INVITs. This gave asset reconstruction companies more options for managing and recovering value from the assets they acquire.
That's a significant development. It seems like the government is really trying to empower asset reconstruction companies to be more effective. But I'm curious, how successful have asset reconstruction companies been in actually reducing the NPA burden on banks and financial institutions?
That's a great question. The success of asset reconstruction companies has been mixed. While they have certainly helped banks clean up their balance sheets to some extent, the overall NPA problem remains considerable. As of September 2024, gross NPAs of scheduled commercial banks stood at about 2.6% of total advances.
That's still a considerable figure. What are some of the factors limiting the effectiveness of asset reconstruction companies?
One major issue is the limited capital base of many asset reconstruction companies. This restricts their ability to acquire large NPAs. Another challenge is the time-consuming nature of the recovery and litigation process, which can sometimes take years.
I can see how that would be problematic. Are there any success stories or case studies that highlight the potential of asset reconstruction companies when they work well?
Absolutely. One notable success story is the case of Edelweiss Asset Reconstruction Company. In 2017, they successfully turned around Barney Defense and Infrastructure Limited, a shipbuilding company that had defaulted on loans worth over 8,500 crore rupees.
That's impressive. It really shows the potential impact asset reconstruction companies can have when everything aligns correctly. But before we wrap up, I'm curious about significant changes. What developments or changes have you seen for asset reconstruction companies in India?
You raise an excellent point about the significant changes in the asset reconstruction space in India. One significant development was the creation of National Asset Reconstruction Company, NARCL. This entity is specifically designed to take over large NPAs from public sector banks.
That sounds like a major shift in strategy. How does this bad bank differ from existing asset reconstruction companies?
The key difference is scale and government backing. The NARCL has substantial government support, allowing it to take on larger NPAs that other asset reconstruction companies might struggle with. It's aimed at accelerating the NPA resolution process.
Interesting. Speaking of the SARFAESI Act, weren't there some important amendments made to it in recent years?
Absolutely. The 2016 amendment to the SARFAESI Act was particularly significant. It extended the Act's provisions to cover non-banking financial companies, NBFCs, which greatly expanded its scope.
That's a crucial point. And if I recall correctly, there were changes to the timelines for various processes under the Act as well, right?
You're spot on. The 2016 amendment extended the time given to borrowers to respond to enforcement notices from 7 to 30 days. This was aimed at providing a more balanced approach, giving borrowers more time to present their case.
These changes seem to address some of the criticisms of the original Act. But I'm curious, how have these amendments impacted the working of asset reconstruction companies in practice?
Well, the extended timeline has certainly given borrowers more breathing room, but it's also elongated the recovery process for asset reconstruction companies. On the flip side, the inclusion of NBFCs has opened up new avenues for asset reconstruction.
That makes sense. By the way, we mentioned earlier that there are 28 asset reconstruction companies in India. Are all of these equally active, or are there some that stand out in terms of their operations?
Great question. While there are 28 registered asset reconstruction companies, a few have been very active. For instance, Edelweiss ARC, which we mentioned earlier, Phoenix Asset Reconstruction Company, and Arcel Asset Reconstruction Company India Limited have been among the more prominent players.
I see. And how do these asset reconstruction companies typically fund their operations? Is it purely through their own capital, or are there other financing mechanisms?
Asset reconstruction companies use a mix of funding sources. They have their own capital, but they also issue security receipts to banks in exchange for NPAs. Additionally, some asset reconstruction companies have explored raising funds through the issuance of bonds or through private equity placements.
That's interesting. It seems like asset reconstruction companies have to be quite creative in their approach to funding and asset management. Are there any innovative strategies you've seen asset reconstruction companies employ in recent years?
Definitely. One innovative approach has been the use of asset-backed securitization. Some asset reconstruction companies have been pooling together similar types of NPAs and creating securities backed by these pools, which can then be sold to investors.
That sounds like a complex process. How has the market responded to these securitized NPA pools?
The market response to securitized NPA pools has been cautiously positive. Institutional investors in particular have shown interest as these securities offer potentially higher yields. However, it's worth noting that this is still a developing market in India.
I can see how that would be attractive to certain investors. Speaking of which, how do asset reconstruction companies typically manage the assets they acquire? Do they usually aim for quick liquidation or longer-term restructuring?
It really depends on the specific asset and market conditions. In some cases, asset reconstruction companies opt for quick liquidation to recover value rapidly. However, given the duration of pending litigations, asset reconstruction companies also prefer one-time settlement (OTS) with the borrowers, typically when they exhaust all other modes of recovery and settlement appears to be the best option.
That makes sense. It seems like asset reconstruction companies need to be quite versatile in their approach. By the way, you mentioned earlier about asset reconstruction companies consolidating assets pledged to multiple banks. Could you elaborate on how that works?
Certainly. This is actually one of the key advantages of asset reconstruction companies. When a company defaults on loans from multiple banks, each bank might have a claim on different assets. An asset reconstruction company can buy out all these loans, consolidating the claims. This makes the recovery process more efficient and often leads to better outcomes.
I see. That does sound more efficient than having multiple banks trying to recover their loans independently. But I'm curious, how do asset reconstruction companies determine which assets to acquire in the first place?
Great question. Asset reconstruction companies typically have specialized teams that conduct due diligence on potential acquisitions. They look at factors like the nature of the asset, its market value, the reasons for default, and the potential for recovery. They also consider the discount at which the bank or financial institution is willing to sell the NPA.
That sounds like a complex process. It must require a lot of expertise. Speaking of which, how do asset reconstruction companies typically staff their operations? Do they mostly hire from the banking sector?
Asset reconstruction companies indeed require a diverse set of skills. While many employees do come from banking backgrounds, they also hire legal experts, real estate specialists, and turnaround professionals. This multidisciplinary approach is crucial for effectively managing and recovering value from a wide range of assets.
That makes a lot of sense. Given all this complexity, I'm wondering about the regulatory oversight. How closely are asset reconstruction companies monitored by the RBI?
Asset reconstruction companies are subject to fairly rigorous oversight. The RBI conducts regular inspections and requires asset reconstruction companies to submit various reports. For instance, asset reconstruction companies must report on their asset quality, recovery performance, and capital adequacy. The RBI also sets guidelines on provisioning norms and valuation of security receipts. RBI also mandates filing of supervisory returns as per master directions notified in this regard.
That's quite comprehensive. It seems like the regulatory framework has evolved significantly since asset reconstruction companies were first introduced. Are there any recent regulatory changes that have particularly impacted the operations of asset reconstruction companies?
Indeed, there have been several significant regulatory changes in recent years. One of the most impactful was the RBI's 2014 decision to increase the minimum investment requirement for asset reconstruction companies from 5% to 15% of the security receipts issued.
That's quite a substantial increase. What was the rationale behind this change?
The primary aim was to ensure asset reconstruction companies have more skin in the game. By requiring asset reconstruction companies to invest more of their own capital, the RBI hoped to incentivize better due diligence and more effective asset management.
I see. Has this change had the desired effect?
To some extent, yes. It's led to more cautious asset acquisitions by asset reconstruction companies. However, it's also meant that some asset reconstruction companies have had to be more selective in their purchases due to capital constraints.
That makes sense. Speaking of the relationship between asset reconstruction companies and banks, how would you characterize it? Is it always smooth sailing?
Well, it's a complex relationship. While it's designed to be symbiotic, there are certainly challenges. One major issue is the valuation of NPAs. Banks often want to sell at higher prices to minimize their losses, while asset reconstruction companies need to buy at prices that allow for profitable recovery.
That sounds like it could lead to some tension. Are there any mechanisms in place to resolve these valuation disputes?
Yes, there are. The RBI has guidelines on valuation methodologies. Additionally, many transactions now involve a component of upside sharing where banks can benefit if the asset reconstruction companies recover more than expected.
Interesting. And what about risk sharing? Do banks completely wash their hands of the NPAs once they're sold?
Not entirely. In fact, banks often retain a portion of the risk. When an asset reconstruction company buys an NPA, it typically issues security receipts to the bank. The bank continues to hold these receipts, which means they still have a stake in the recovery process.
I see. So it's not a complete transfer of risk. Are there any other factors that might make banks hesitant to sell NPAs to asset reconstruction companies?
Absolutely. There are concerns about potential scrutiny, especially for public sector banks. There's always the risk that a sale might later be questioned as undervalued. Additionally, some banks worry about the potential for dubious transactions given the complexities involved in NPA sales.
Those are valid concerns. It seems like there's a delicate balance to strike. Before we wrap up, are there any alternative mechanisms available to banks for addressing NPAs?
Yes, there are. One significant alternative is the corporate debt restructuring CDR scheme introduced by the RBI in 2001. It's designed for timely and transparent restructuring of corporate debts outside of legal proceedings.
How does the CDR scheme work?
The CDR scheme applies to corporates with loan exposures of 10 rupees crore or more. It requires approval from 75% of lenders, a supermajority. It's been quite successful. As of December 31st, 2016, the Corporate Debt Restructuring (CDR) cell had approved a total of 530 cases under the CDR mechanism with an aggregated debt amount of 4.03 billion rupees.
That's impressive. It seems like banks have multiple tools at their disposal for managing NPAs. Thank you for this insightful discussion on asset reconstruction companies and their role in India's financial landscape.
You're welcome. Speaking of alternative mechanisms, another important tool in addressing NPAs is the Debt Recovery Tribunals, or DRTs. These were established under the Recovery of Debts Due to Banks and Financial Institutions Act of 1993.
Interesting. How do DRTs differ from asset reconstruction companies in their approach to NPA resolution?
Well, while asset reconstruction companies focus on buying and managing NPAs, DRTs provide a legal forum to recover debts more quickly. They're essentially specialized courts for debt-related cases.
I see. And how effective have these DRTs been in practice?
They've had a significant impact. Following the SARFAESI Act, 33 DRTs were set up across India. They've helped expedite the debt recovery process, which was previously bogged down in regular courts.
That's quite a number of tribunals. But I'm curious, how do banks decide whether to use ARCs, CDR, or DRTs for a particular NPA?
It often depends on the specific circumstances of the case. For larger corporate debts, CDR might be preferred. For cases requiring legal action, DRTs are the go-to. Asset reconstruction companies are often used when banks want to clean up their balance sheets quickly.
Interesting. It seems like a multi-pronged approach to tackling NPAs. How do these mechanisms complement each other?
Well, they each address different aspects of the NPA problem. Asset reconstruction companies focus on asset management and recovery, CDR on debt restructuring, and DRTs on legal recovery. Together, they provide a comprehensive toolkit for NPA resolution.
That makes sense. But with all these options, has there been a noticeable impact on the overall NPA situation in India?
There has been some improvement, but the NPA issue remains considerable. The GNPA to total assets stood at 6.93% as of September 30th, 2021.
That's still quite high. What do you think are the main challenges in further reducing this figure?
Well, there are several factors at play. Economic conditions, regulatory issues, and sometimes reluctance from banks to recognize and address NPAs early all contribute to the problem.
I see. Given these challenges, are there any new initiatives or reforms being considered to further strengthen NPA resolution mechanisms?
Yes, there are ongoing efforts. For instance, creation of National Asset Reconstruction Company to handle large NPAs from public sector banks.
That sounds like a significant development. How does this bad bank differ from existing asset reconstruction companies?
National Asset Reconstruction Company (NARCL) is quite different from existing asset reconstruction companies. It's a government-backed entity with substantial financial backing, allowing it to take on larger NPAs that current asset reconstruction companies might struggle with.
That's interesting. So it's essentially scaling up the asset reconstruction company model with government support. How might this impact the existing asset reconstruction companies?
Well, it could potentially change the landscape significantly. The NARCL focuses on larger NPAs, particularly from public sector banks. This leaves existing asset reconstruction companies to focus more on smaller NPAs or specific sectors where they have expertise.
I see. Speaking of expertise, we mentioned earlier that asset reconstruction companies need diverse skill sets. How do you think the talent pool for asset reconstruction companies has evolved over the years?
That's a great question. The talent pool has definitely matured. Initially, asset reconstruction companies primarily drew from banking backgrounds. Now we're seeing more professionals with diverse experiences, legal experts, turnaround specialists, even tech professionals as asset reconstruction companies increasingly leverage data analytics in their operations.
Fascinating. It sounds like the industry is becoming more sophisticated. On that note, how have technological advancements impacted operations of asset reconstruction companies?
Technology has been a game changer. Many asset reconstruction companies now use advanced analytics to assess the value of NPAs and predict recovery potential. Some are even exploring blockchain for more transparent transactions. These tools are helping asset reconstruction companies make more informed decisions and manage assets more effectively.
That's impressive. It seems like asset reconstruction companies are really adapting to the digital age. But I'm curious, with all these advancements, are there any persistent challenges that asset reconstruction companies face?
Absolutely. One ongoing challenge is the time-consuming nature of the recovery process. Even with improved mechanisms, recovering value from distressed assets often takes years. Another issue is the limited capital base of many asset reconstruction companies, which restricts their ability to acquire large NPAs.
Those sound like significant hurdles. Are there any regulatory changes being considered to address these issues?
Yes, there's ongoing dialogue about potential reforms. For instance, the R provisions allowing asset reconstruction companies to invest in equity of companies they're restructuring, which could give them more flexibility in turnaround efforts. There's increase in regulatory capital requirements for asset reconstruction companies, wherein the RBI requires asset reconstruction companies ARCs to maintain a minimum net owned fund NOF of 3 billion rupees by March 31st, 2026.
Interesting. It seems like the asset reconstruction sector is constantly evolving. Before we wrap up, do you have any final thoughts on the future of asset reconstruction companies in India?
Looking ahead, I believe asset reconstruction companies will continue to play a crucial role in India's financial landscape. The creation of the NARCL will likely reshape the market, pushing existing asset reconstruction companies to specialize or innovate. We might see more sector-specific asset reconstruction companies emerging, focusing on areas like real estate or infrastructure where specialized knowledge is valuable.
That's an intriguing perspective. Do you think international players might become more involved in India's asset reconstruction sector?
That's certainly a possibility. As India's economy grows and regulations evolve, we might see increased interest from global distressed asset managers. Their expertise and capital could potentially boost the effectiveness of NPA resolution in India.
Interesting. It seems like the asset reconstruction sector is poised for significant changes. Thank you for this comprehensive discussion on ARCs and their role in addressing India's NPA challenge.
Absolutely, it's been a pleasure discussing this crucial aspect of India's financial ecosystem. Now, as we wrap up, let's touch on some proposed reforms that could shape the future of asset reconstruction companies and NPA management in India.
That sounds great. What are some of the key reforms being considered?
Well, one significant proposal is the introduction of a Charter of Code of Conduct for banks under the SARFAESI Act. This would set clear guidelines for how banks should interact with borrowers and manage NPAs.
Interesting. How would this impact operations of asset reconstruction companies?
It could potentially streamline the process of NPA transfer to asset reconstruction companies by setting clear standards. Additionally, there's a push for mandatory training for authorized officers dealing with NPAs and asset reconstruction companies.
That makes sense. Training could certainly improve the efficiency of the process. Are there any operational aspects or thresholds relating to legal resolution and recovery process?
Yes, few points I would like to mention around thresholds for the legal process. The DRTs handle cases where the debt amount is at least rupees 10 lakhs. For amounts below this threshold, creditors must approach civil court.
That's very useful information for the legal process. What about NCLT cases?
NCLT handles cases related to company law matters, including insolvency and bankruptcy proceedings for companies and limited liability partnerships. There's also talk of strengthening lock-adalas through collaboration with asset reconstruction companies.
It sounds like a multi-pronged approach. Are there any specific provisions that can help asset reconstruction companies?
Yes, asset reconstruction companies are allowed to convert debt to equity, giving them more flexibility in restructuring. There's also discussion about extending the holding period for assets beyond the current 8-year limit.
These changes could significantly impact how asset reconstruction companies operate. What would drive more reforms for the sector?
The main goal is to enhance the effectiveness of NPA resolution. Despite the progress made, NPAs remain a significant challenge for India's banking sector. More reforms are required to address current bottlenecks and empower asset reconstruction companies to play an even more effective role.
That makes sense. Given these potential changes, how do you see the future of asset reconstruction companies in India?
The outlook for asset reconstruction companies remains positive. As India continues to grapple with NPAs, the role of asset reconstruction companies is likely to expand. With new reforms and legislative changes, we might see asset reconstruction companies becoming even more integral to India's financial landscape.
It's certainly an evolving situation. Thank you for this insightful discussion on the proposed reforms and future outlook for asset reconstruction companies in India.
Thank you for joining us for this deep dive into asset reconstruction companies in India. We've covered a lot of ground today, from their origin to their current operations and future prospects.
Absolutely. It's been a fascinating journey through the complex world of NPAs and their resolution. Before we wrap up, let's quickly recap some of the key points we've discussed.
Great idea. First and foremost, we've seen how asset reconstruction companies have become vital institutions in India's fight against NPAs since their introduction under the SARFAESI Act of 2002.
Right, and we explored how they operate within a complex legal framework, with the SARFAESI Act providing the foundation for their activities.
We also discussed how asset reconstruction companies work closely with banks and financial institutions, acquiring and managing NPAs to improve the overall health of the banking sector.
That's correct. And while asset reconstruction companies have been effective, we noted that they face challenges, including valuation disputes, capital constraints, and regulatory limitations.
Indeed. We also touched on alternative mechanisms like CDR and DRTs that complement operations of asset reconstruction companies in addressing NPAs.
And let's not forget the significant impact asset reconstruction companies have had, contributing to NPA reduction and creating a market for distressed assets.
Absolutely. We also delved into proposed reforms aimed at enhancing effectiveness of asset reconstruction companies, including regulatory changes and operational improvements.
Looking ahead, we discussed how the future of asset reconstruction companies in India looks promising, with their role likely to evolve as they continue to address the persistent NPA challenge.
That's right. For private equity investors looking at Indian asset reconstruction companies, understanding these dynamics is crucial. The sector offers significant opportunities, but also comes with unique challenges that require careful navigation.
Absolutely. As we conclude, we hope this information proves valuable to our listeners in their investment considerations and understanding of India's financial landscape.
Thank you all for joining us on this deep dive into asset reconstruction companies in India. Until next time, keep exploring, keep learning, and keep diving deep.
That's all for now. Thank you and have a nice day.